Good morning, good morning, good morning. It is Friday the 5th of September, all day. It looks like we made it to the end of the week. You join myself and Mr. Michael Brown, where we will be giving you a preview of yesterday, a review of yesterday, a preview of today. Why can I never get that right? Preview of today. But before we do, I will get the legals out of the way. Nothing discussed on this space session constitute trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed Mr. Michael Brown. How are you, my dear friend?
Well, a very good morning, Ryan. Very good morning, everyone. A very happy Friday from here in a sunny but rather cool Blackheath this morning.
Oh, so someone's working from home, basically.
Do you know what? I've been forced to work from home today.
Oh, yeah, all right.
No, that's legitimate. We have a technical boffin in the office rewiring our internet, so I've been told I need to stay at home.
Sorry. You mean an electrician?
No, well, they called themselves a network engineer, but it sounds like what Tom Talks Cars does, where you just make yourself out
Fuck
to have a
all.
fancy title, but you just plug cables in all day.
Thankfully, he's not on. He's not listening at the moment. But
Well,
yeah,
it's a Friday morning. He'll be hungover, rotting in bed somewhere.
well, so am I. But I'm still on the show. I mean, what?
Oh, dearie me. Oh, God. Right. Shall we
Covering
move on?
KFC. Yes. What? Let's.
Right. While you wipe KFC off your chest, I can tell you what's been going on in the
Hey!
markets over the last 24 hours, which, to be honest with you, is not especially much. In terms of
And
price
that's the end of the
action,
show.
in terms of price action, at least yesterday, it was a relatively dull day, albeit one where markets continued to largely take the path of least resistance, which naturally continues to lead higher for the equity market, with the S&P and Nasdaq both adding just shy of 1% on the day, while we saw further gains across the Treasury curve as the 10-year yield fell below 4.2% to its lowest level since May, and the 30-year yield, I should say, this morning trading beneath 4.85%. Besides that, a little bit of profit taking creeping in to gold, although the yellow metal continuing to linger about $30
Oh.
off the off the record highs that we set during the latter part of Wednesday's session, and in the foreign exchange complex, tight ranges continuing to dominate across G10, albeit with a marginally dollar bearish bias this morning as we move in towards the US labour market report a little bit later on today. We will, of course, preview that momentarily, but plenty to get through before that. On the trade front, the US and Japan have finally signed an order implementing the trade agreement that they made a number of weeks ago now. You'll recall, of course, we've discussed this a number of times on the Morning Blast, where essentially, we've had a bit of a culture clash taking place where the Trump administration have been saying, well, we've shaken hands, we've agreed a deal, that's good enough for us. Yet the Japanese side of things, particularly trade negotiator Akazawa, have been very, very nervous, to put it politely, and not wanting to believe that this is actually going to take place until the ink is dry and there's a wax seal on a bit of paper. But that now does indeed appear to have happened. So all of the prior commitments, particularly the 15% tariff on autos, they are now sort of signed, sealed and delivered. The other thing on trade is President Trump was hosting a whole host of tech CEOs in the White House for a dinner yesterday. It was quite frankly sickening to watch this on television, all of these various CEOs running around, going around the dinner table going, oh yes, Mr. Trump, thank you for your visionary leadership, all the rest of it. Can I lick your boots more than the next bloke?
Boots,
The
boots.
main the main headline from this is that Trump again warned that, quote, fairly substantial tariffs on chips are likely to be coming. This is according to CNBC, citing sources familiar, but he also apparently signalled that Apple and others who were present at this dinner will be, quote, safe. So we will see what happens on that one. I think
Basically, if you turned up and you're willing to
you're
get on your
fine.
knees, yeah, if you turned up wearing knee pads, you're completely fine.
Yes, I think that's absolutely the way to look at things. We will, of course, see how long it takes for these chip tariffs to be implemented. I think it was probably about 2 months ago now that we were 2 weeks away from these tariffs coming in, and we still don't actually know what's going on that front. Just sticking with the US briefly, the Justice Department, they have now formally opened a criminal investigation into Fed Governor Lisa Cook. They have issued various subpoenas as a part of this ongoing inquiry into mortgage fraud. Of course, there are a whole host of legal proceedings still ongoing around whether or not Trump is permitted to fire Lisa Cook from her role. As things stand, we have not had a definitive ruling one way or another from any court in the United States, although whichever way that ruling falls, it's almost certain the other side will appeal and that will end up in the Supreme Court at some stage. The final headline out of Washington, D.C., before moving on to other matters, is that President Trump is going to be signing some executive orders later on today. One of those executive orders will rename the Department of Defense to the Department of War. Of course, this is the same President Trump who claims he has stopped 7 wars, maybe on track to stopping an 8th, and is absolutely desperate for a Nobel Peace Prize. So I'm not entirely sure how we square that circle.
The only question I keep asking myself is, war, what is it good for?
Oh, dearie me. Deary me. Oh, right. We'll brush over that one very quickly. A few other headlines and data points. We may as well start with the data, actually. We had a few prints out of the United States yesterday. The ADP employment figure coming in a little bit below expectations at 54,000 in August, below the 68,000 consensus. I would say that's close enough not to be worth worrying about too much. I put out a chart yesterday, and if Ryan's in a compass mentis state, he can go and find that and pin it to this space. The ADP print appears, at the moment at least, to be more... Are you dying?
Yeah, yes, yeah. No. I'm glad you brought this up because after months of you berating me and telling me to shut up and I'm talking bollocks, turns out that I am demonstratively right by ADP is actually a better indicator than NFP's headline print.
Potentially. If
Well,
we assume
no,
that the revisions are
no.
correct. Because we
You
do have the
You
census
shut.
benchmarking next week.
You shut your whore mouth. It's demonstratively right that I'm looking at a chart right now, and I'm going to post it into the top, where the ADP print is more in line with NFP data after it's been revised to be accurate.
If we assume the revisions are accurate.
Oh, piss off. Why does everyone find it so hard to say Ryan's got something right?
Because it's so rare.
Okay, I'll make you right.
Moving on.
Okay, moving on.
We also had the latest jobless claims stats out of the US yesterday. Initial claims rising by 237,000 in the week to the 30th of August, above the 229,000 prior. We also had continuing claims that came in better than expected at 1.94 million, down from a prior 1.954 million. Do bear in mind, though, that neither of those prints pertain to the August non-farm payrolls survey week. And of course, we get that August jobs report a little bit later on today. And lastly, in terms of US data, yesterday we have the ISM Services PMI metric. That printed at 52, well above the expected 51 and prior 50.1. We also saw a cooling in the prices paid metric, a nice rise in new orders to 56, and employment contracting at a marginally slower pace with the sub-index at 46.5. And just to round out on the data front, we had the latest retail sales report out of the UK this morning. The July retail sales numbers that have been delayed for a fortnight. Headline sales rose by 0.6% on a month-on-month basis in July. Excluding fuel, sales rose by 0.5% month-on-month. Both of those marginally better than expected, but the ONS also giving us a reason why they had to delay that release for a fortnight. And, well, I will just quote from the ONS, and then I'll tell you what it actually means. The ONS said, and I quote, "During our scheduled review of retail sales seasonal adjustment as part of our quality assurance, we identified a problem with a file used to adjust for our survey reference periods, not aligning precisely with calendar months, blah, 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 blah. For recent time periods, some parameters were not correct, affecting seasonally adjusted data within our retail sales release." In plain English, that means that some idiot at the ONS in Newport doesn't understand how the months of the year work. I mean, what on earth are we dealing with when this lot are trying to produce statistics for us?
Put yourself in my shoes last night. I was very mature yesterday before I went to the pub. I went to some fintech kind of event kind of thing in actually in LSEG in London Stock Exchange. And
they let you in the stock exchange?
Well, yeah, obviously I used a alias, but anyway.
Oh, no wonder the FTSE's down this morning.
Hey, And at the very end, there was a little question session, and a woman, a very, very lovely woman, put her hand up and said, "I work at the Bank of England, so as you can imagine, I'm surrounded by very smart people." Now you can imagine,
Really?
I was about 4 beers in at this point. You can imagine how much it took for me not to stand up, point, and laugh.
Well, you demonstrated a remarkable degree of restraint there, Ryan,
No,
and you
I
should be
I did.
commended for that.
I am
Um,
genuinely proud of myself.
Oh, dearie me. Right, moving on from the complete shit show that is the ONS, a few other headlines just worth bringing you this morning. We heard obviously yesterday, sorry, not yesterday, on Wednesday, from Reuters citing sources within OPEC Plus that they were potentially looking to discuss an output hike this weekend. The Russian Energy Minister Alexander Novak said yesterday that 8 OPEC Plus nations are not discussing an output hike right now, so pouring a little bit of cold water on what we had heard previously, but nonetheless crude remaining under pressure. Here in Europe, French President Macron, according to Bloomberg citing sources, he is looking to avoid a snap legislative election if Prime Minister Bayrou loses the no confidence vote next Monday. Not sure why I say if he loses, because he is almost guaranteed to lose that no confidence vote on Monday. Macron is basically going to try and do the same thing for a third time in finding an agreement among parties to basically appoint some sort of centrist technocratic prime minister who can hold together his bloc and also forge ties with the Socialist Party in France. Basically, Macron does not want to go to the polls. And the main reason for that is, well, 2 reasons. One is he would lose quite badly. But 2, and this is the reason he'll give to the media, is that they probably won't yield any sort of different result to the current makeup of Parliament. So you'd have an election and end up basically in the same mess that you're in at the moment. Moving away from that into the AI space, DeepSeek in China, they are reportedly looking to release AI agents by the end of the year as they continue to try and compete with US rivals such as OpenAI. For those who are unaware, like me, apparently AI agents are designed to, and I quote here, carry out multi-step actions on a person's behalf with minimal direction from the user while learning and improving based on their prior actions. So good for them, I suppose. Also in the AI space yesterday, OpenAI, they are moving closer and closer towards mass output of their own AI chips. They will be produced in conjunction with Broadcom. And also speaking of chips, NVIDIA, and I don't understand this one at all. So if anyone can clear this up, NVIDIA have agreed to rent their own AI chips from Lambda. Not sure who Lambda are or what Lambda is, but apparently this is going to cost them $1.5 billion. Quite why you'd sell something and then rent it back, I don't understand. Maybe there's some sort, maybe there is a good reason for that, but if there is, then please do let us know. A couple of other bits
No, no,
of
no, no, no.
corporate.
No. Honestly, it's a Friday. Don't worry about it.
Yeah, I'm just saying that to make people think we care. We actually couldn't give less of a fuck. A couple of other bits of corporate news just before I hand back to you, Ryan. Bain Capital, the private equity firm, they are mulling a bid for Costa Coffee. Coca-Cola looking to sell Costa. This is according to sources cited by PE News. Costa Coffee tastes absolutely disgusting. So unless they're going to fix that, then they're onto a bit of a loser with that one. Revolut in fintech news, they are looking to buy back up to 10% of shares held by some of their early backers. This follows reporting earlier in the week that the firm is looking to conduct a secondary share sale at a valuation of about $75 billion. And of course, rumours around a potential IPO continue to swirl on that front as well. And last but by no means least, General Motors, they are going to cut back on production of their Bolt electric vehicle. It looks like things are running out of charge there as Trump ends
Oh, you
incentives towards
wanker.
EV purchases.
Uh, Thank you very much, Mr. Michael Brown. Let me read off some choice headlines from Zach's always awesome overnight news roundup. As usual, give Zach a follow, if only to make him feel better about himself. And also, it'll be going up on Substack soon. In trade and tariff news, Trump signed an executive order implementing Japan's trade agreement with maximum 15% tariff. Michael was talking about Akazawa's travel plans earlier on. The US is preparing to start renegotiating its largest free trade deal, the US-Mexico-Canada agreement. WSJ sources note that within the next month, the office of the USTR will begin public consultations on renegotiating the deal, which it must do by October the 4th under the 2020 law. So we expect some headlines on that. South Korea said on Friday that an executive order signed by Trump to implement a trade deal with Japan that includes a lower 15% tariff on Japanese car imports is expected to impact its own auto industry, which at the moment is pinned to 25% tariffs. India's Commerce and Industry Minister said negotiations with the US on trade deals should be allowed to continue and there was no need to, quote, panic over the delay. When you get government ministers mention words like panic, it means that they are themselves indeed panicking.
Yes, quite.
Sticking with India, top Indian Indian Oil Corp, they skipped the purchase of US oil in its latest tender and instead bought 2 million barrels of West African oil and 1 million barrels of Middle Eastern grade. That's according to trade sources. I'll give you a clue. If you're trying to rescue your trade deal, buy as much as you can from the US. But just me. Macro news.
And you did used to trade a little bit of oil
Well, I
as
don't
well.
like to mention it, mate. Don't like to mention it. China's stocks, they steadied on Friday after a steep loss in the previous session, but remained on course for the biggest weekly fall in 5 months as the market participants took profits following a 2-month rally. That's been an ongoing theme, pretty much in the morning blast the last few weeks. Been talking about this huge surge in Chinese equities. German factory orders, they unexpectedly slumped the most since January, undermining optimism.
Oh, what a shame.
Why do you think I'm reading it out? Undermining optimism that the sector can soon emerge from 3 years of recession. Pretty dire data, really. That I think expected was a 0.5% gain, and it was a 2.9% decrease. So,
It's a rounding error.
Sticking with Germany, Germany's budget committee finalised the budget for 2025 with record investments to revive the economy and a strong commitment to defence spending. That's according to Reuters sources. The budget, with a total spending 502.5 billion euros, includes 62.7 billion euros investments, with only small changes from a draft passed by the cabinet before the summer recess. Sticking in Europe, France faces a slew of key sovereign debt rating reviews next week, with the risk of downgrades rising as the government, which looks set to lose its confidence vote on Monday, it will lose its confidence vote on Monday, struggles to gain backing
Yes.
for an unpopular debt-cutting plan. Just a quick note on this one. The problem with going to anyone that's obviously not staying up to speed on this, the problem with France basically is they need to severely cut their budget, cut spending, reduce welfare, etc., etc. Unfortunately, the way the French Parliament is set up, they can't get any of these cuts going through. So literally, France is now bankrupt, but the people in power are unwilling to accept this and realise this, and they're still going to push for, not hiking up retirement ages, not looking to tax more. It's all a bit of a shit show, really. And it's
But I think the other thing with France, I think
on
there's
France.
twofold. Is one, as you say, the government aren't going to push for those measures, basically because they know that they're going to be, strikes and people burning tires in the streets and God knows whatever else if they even try it. The second problem that they've got is because no one's got a majority in the legislature, all they can do is just keep rolling over the current budget. And that's just making the problem worse and worse because they're on an unsustainable fiscal trajectory. By rolling over the budget that has you on that trajectory, you're just making the problem worse. You're not even trying to fix it.
Well, and this is it, right? Not being funny, but the reason that we elect people to make these decisions is to make tough decisions. And just going off on a bit of a sidebar here, it's one of the reasons why I absolutely fucking hate when politicians abstain on voting. If you're in the House of Commons per se, and it's a big vote, you should be forced to agree or disagree or vote for or against whatever the policy is. That's the whole fucking reason why people have voted you into power, to make these tough choices. And it just, when you've got spineless politicians that are unwilling to be able to make tough decisions, that's when you are truly led by donkeys. But anyway, moving on. UK retail sales, they declined in 3 months to July according to the delayed ONS figures. The 3-month fall came despite better than expected sales in July. Those three month-on-month gains were wiped out by sharp downward revisions in prior periods. Again, as Michael and myself keep saying, the ONS data is completely bullshit. UK house prices, they rose for a third straight month to a record high as cheaper borrowing costs and rapid wage gains improve affordability for buyers. Taiwan's largest insurers are looking to snap up overseas bonds as they prepare to invest their biggest cash pile in years in search of higher yields. A renaissance for nuclear energy threatens to create a shortfall in the supply of uranium. The uranium bulls and bros are very cultish, so they'll be liking this. The industry body urging producers to step up efforts to find new sources as the output from the current crop falls. Geopolitical news: Trump is expected to sign an executive order on today to rebrand Department of Defense Department of War. As Michael and me, Michael said earlier on, this name was last used in 1947, so quite why we need to get new business cards printed now, I'm not really sure. US and Taiwanese defense officials, they held secret talks, not so secret talks, in Alaska last week, days before President Xi flaunted China's military might to the world. At the parade earlier this week. 2 Venezuelan military aircraft flew over an American vessel in the international waters off the coast, according to the Pentagon. A fresh escalation between the two adversaries after the US struck a speedboat purportedly carrying drugs from the country. Equity news before I hand back to Mr. Michael Brown. OpenAI set to produce its own AI chips for the first time, co-designed with Broadcom. Broadcom incidentally swung to a profit and surpassed expectations for the fiscal third quarter. Sales and its outlooks for the current quarter are looking healthy. The CEO on the call also noted a mystery customer committing to $10 billion in orders for its custom chips next year. JP Morgan and Mitsubishi UFJ Financial are leading a roughly 38 billion with a B debt package to fund data centers connected to Oracle. Apple's annual sales in India hit a record 9 billion in the last fiscal year, according to Bloomberg. The Japanese auto shares climbed in Tokyo after Donald Trump signed an executive order confirming the deal that limits US tariffs to 15%. And finally from me, Meta CEO Zuckerberg said at the White House when asked by Trump how much Meta would spend over the next few years, quote, something like, I don't know, at least $600 billion. So, yeah, thanks for that, Mr. Zuckerberg.
Well, that clears that one up, doesn't
Exactly. And back to you in the studio.
Very good. Thank you, Ryan. In terms of today, then, of course, all eyes on the latest US labour market figures that we get at 1:30 this afternoon. I'll get onto that. Oh, for God's sake. I'll get onto that momentarily. Although before I do, just worth bearing in mind that at 10 o'clock this morning, we do get some final GDP figures out of the Eurozone, expected to show the economy having grown by an unrevised 0.1% on a quarter-on-quarter basis in the second quarter. And also at 1:30, we get the latest jobs data out of Canada. Money markets pricing about a 2 in 3 chance of a September rate cut from the BOC, with a 25 basis point cut from the Bank of Canada, fully discounted by the October meeting. All of that, though, will, of course, be overshadowed by the latest US labour market report, which is, of course, due at 1:30 this afternoon here in London. 8:30 on the east coast of the United States. Headline non-farm payrolls are expected to have risen by 75,000 last month. That would be broadly unchanged from the prior 73,000, although the range of estimates for the payrolls print is as wide as ever, from 0, implying no change to payrolls on the downside, to 115,000 on the upside. Of course, revisions to the payrolls print are always worth watching very, very closely, but will attract even more attention than usual after the huge minus 258,000 revision that we saw in the month of July. In terms of leading indicators for the jobs number, both initial and continuing jobless claims were pretty much unchanged between the July and August survey weeks, rising by 13 and 8,000 respectively. Meanwhile, both the ISM manufacturing and services employment surveys pointed to continued contraction, albeit at a slower pace, while, of course, as I mentioned a moment ago, the ADP metric came in at 54,000 yesterday. In terms of other factors to watch around the jobs number, at least the headline payrolls print, we have in August print in recent years seen the return of schools in the United States skew the seasonal adjustment quite a lot. So if we do see a print that is considerably away from consensus to either side, the first thing I would be doing is looking at the state and local government employment, because if they are looking, let's just say, odd, then that is likely down to some dodgy seasonals around the rehiring of teachers. The other thing to bear in mind is that President Trump's pick for the new BLS Labour Statistics Commissioner, EJ Antoni, he is not yet confirmed to his post. So, of course, there was a lot of concern last time out around whether the figures will be politically skewed. Trump's pick to run the BLS is not doing the job just yet. So do bear that in mind. And also, if anyone starts spouting nonsense about that, you know it is exactly that, complete and utter rubbish. In terms of other areas of the jobs report, average hourly earnings, they are seen rising once more by 0.3% on a month-on-month basis. That would see the year-on-year pace soften to 3.7%, down from a prior 3.9. And again, that would be broadly in keeping with the Fed's long-standing view that they are not seeing any significant upside inflation risks from the US labour market. Meanwhile, turning to the household survey, unemployment, that is seen rising to 4.3% in August, up from a prior 4.2. Although do bear in mind that the unrounded print was 4.2479% last time out. The reason why I mention this is because we weren't that far away from 4.3% in July, so it wouldn't necessarily be a huge jump to see us move to 4.3 this time around. Meanwhile, labour force participation, that is set to remain unchanged at a cycle low 62.2%, still being depressed by tighter immigration enforcement. A bit of context around the figures. Firstly, I think it's important to bear in mind that while we are expecting what we would ordinarily see as a low payrolls number, just around 75,000, the break-even pace of jobs growth in the United States, i.e. the pace required for employment growth to keep up with expansion in the size of the labour force, that's probably between 50 and 70,000 at this moment in time. So a print in line with consensus would also be in line with that break-even rate and not necessarily as bad as we would ordinarily expect it to be. In terms of the implications of the figures, as I said this time yesterday, frankly, I don't think it really matters at all. Obviously, we're going to see some knee-jerk moves and market volatility as the data crosses, but I don't think a solid report is going to deter the Fed from delivering a 25 basis point cut on the 17th of September, nor do I think a softer than expected report will push them towards a larger 50 basis point move, given the upside inflation risks that we continue to see. In any case, money markets, as I speak, fully discounting a 25 basis point cut at that September meeting, while pricing a total of around 60 basis points of easing by the end of the year. So fully discounting another cut and pricing about a 4 in 10 chance of a third cut before the year is out. For markets, I think it's questionable as to where the focus will fall as the jobs report is digested. The vibe really for the whole year so far has been that the market has been focused on the actual economic story that the data is telling us, as opposed to any potential policy implications of the data. And I think that's really because the Fed had, for the majority of the year so far, been signalling very clearly that they are on hold. That may be somewhat different this time around, now that Powell has pivoted, now that we are expecting policy easing at the September meeting. There is a case to be made that a soft report could actually be a bit of a boost for risk appetite if it leads to a more dovish monetary policy outlook. That is the jobs report. Other than that, there is not a lot going on today. We don't have any central bank speakers scheduled. The Fed will be beginning their pre-meeting blackout period at the close of play today. And of course, the only other thing for me to do is just to issue the usual reminder around the potential for weekend gapping risk, not only on any trade, tariff or geopolitical headlines, but of course also with that OPEC Plus meeting in the mix on Sunday as well. So for this morning and for this week, that is all from me.
Thank you very much, Mr. Michael Brown. I'm going to end the show and thus end the week with a quote from Trump. And I honestly believe he's bang on the money with this. And he said, in regards to NFP data, and I quote, "The real numbers will be in a year from now." And that's exactly how it works with NFP data. It is the ginger stepchild to ADP's gloriously accurate employment data.
Oh my God.
Everyone, Well, we hope you've had a wonderful week. Have a wonderful weekend. Stay safe. Keep it tight. We will see you all on Monday morning, bright and early. Much love. Go down the pub. We'll see you later.
Have a good weekend. Bye for now.